Hello, my name is Victor, and in today's video, we are going to go over 5 stocks who just reported their earnings. We have a ton to go through, so let's not waste any time. Let's get right into it. And the first income statement that I want to analyze is for Meta stock, who has been struggling tremendously throughout the year, so they really needed a strong quarter here, so let's see what happened. Kicking things off with Meta's income statement analysis, here we go. Top line growth of 28%, incredibly strong number for Meta. 47.5 billion during this time last year, up to now 60.8 billion now in 2026. Very strong top line growth for Meta. But as you can see from the remainder of this analysis being in red, it's going to be a rough ride. So go ahead and gear up for that, because cost of revenue was up 33%. Higher growth than your top line, not what you want to see. Research and development up even higher, up 67%. Marketing and sales, that wasn't that bad. That was up 15%. I'm not sure why I put that in red. That should have been in blue. G&A up 11. Oh my goodness. G&A up 111%. I mean, that is not good. 2.6 billion this time last year, up to 5.6 billion in 2026. So as you can see, total costs and expenses were up 55%. And I mean, it doesn't take a genius to understand that if your expenses are growing much faster than your top line, your margins are going to get hit, and that is exactly what happened to Meta. Income from operations was down 8% compared to this time last year, and net income was down 14%. And like I mentioned at the beginning here, Meta has been struggling throughout 2026, and it looks to me like those struggles are going to continue because Meta stock price is down 8% over the last 5 days ever since we got those earnings. And honestly, I can tell you from my personal experience that I listened to Meta's earnings call, and Zuckerberg sounded incredibly defensive throughout the entire call. I know that he must be feeling the pressure here, because anytime that any analyst would ask him any kind of question, he just seemed incredibly over defensive to me, and I can understand why he's starting to feel the pressure, especially as we get into some of their competitors here later in the video. And I just want to take a moment here, and if you enjoy these earnings videos, be sure to give me a like and subscribe. It helps out the channel tremendously and lets me know that you want to see these types of videos in the future. But okay, we're going to keep it moving here because we still have 4 more stocks to go through and a ton of numbers. So stock number 2 is going to be Visa stock, and their revenue was pretty good, up 14% compared to this time last year. 10.1 billion back in 2025 versus 11.6 billion in this most recent quarter. Now, just like Meta, I do see a little bit of a pattern here where the top line is incredibly good, and then we have a massive spending problem. Because personnel was up 41%, 2.5 billion in 2026 versus 1.7 billion in 2025. That is a massive jump. Marketing is up 54%. Now, I do want to mention that I saw a ton of Visa marketing throughout the World Cup, so I'm not really sure if that is all of it, but I can tell that they spent a pretty penny to make sure that they were seen by the billions of people that were watching throughout the World Cup this summer. Keeping it moving though, network and processing was up 25%, professional fees up 32%, depreciation up 16%, and then we do have a couple of green spots here. G&A was up only 4%, and litigation provision was down 59% compared to this time last year. Overall though, total operating expenses for Visa in this most recent quarter were up 19%, which is a higher rate than their top line. And as you would expect, just like with Meta, if your top line is not growing as fast as your expenses, you're gonna get squeezed on your margins. Operating income for Visa in the most recent quarter was up 11%, and net income was up 7%, 5.6 billion this year versus 5.3 billion last year. So a little bit of a shaky quarter for Visa. Overall, the stock really hasn't moved a ton. They're up 2% over the last 5 trading days ever since we got those earnings. Visa is still a stock that I am incredibly bullish on throughout the next couple of years though, but it will be interesting to see if they can manage those expenses a little bit better through the remainder of 2026. Keeping it rolling here, stock number 3, and that is going to be Starbucks. Blast from the past, a stock that I used to talk about all the time. And let's just go ahead and have a look here. Net revenues down 1%. Starbucks still struggling to get that top line where it used to be over the last 3 to 4 years. But then, in a reverse of Meta and Visa, look at all of the green in the expenses category for Starbucks. Product and distribution costs were down 4%. Store operating expenses were down 3%. Other operating expenses down 13%. Depreciation down 15%. G&A down 12%. Now I did highlight this section here, restructuring and impairments. That was up tremendously, but I'll get more into that here in a little bit. Although Starbucks' top line is down, they did such a great job of managing their expenses that their operating income was up despite the weak top line. Operating income came in positive 5%, and even better, net income was up 87% for Starbucks in this most recent quarter. This time last year, $558 million on the bottom line. Now we are well over $1 billion, making its way down to the bottom line. And I, for one, love to see it. I do want to go back to that line item of restructuring, which was up tremendously from this time last year. But that is basically Nichols, the CEO of Starbucks, back to Starbucks initiative where they're revamping stores, they're closing stores that aren't in a good location or are not performing, while at the same time focusing on stores that are performing and making them even better. Overall, it seems to me like Wall Street is still hitting the brakes a little bit. They're a little bit cautious when it comes to Starbucks, and I can't blame them considering how they have been performing over the last couple of years. But the stock is up 1% after earnings. Specifically, I want to highlight that in North America, everything seems to be going in the right direction. Same-store sales for Starbucks were up 8.5%. Transactions were up 4.5%, and average tickets were up 3.5%. Love to see all of that. Incredibly bullish, if you ask me, when it comes to Starbucks stock, because just a couple of years ago, these were all of the items where Starbucks was struggling. They were not able to get average ticket sales up. They couldn't get same-store sales up. And now here we are in the middle of 2026, seeing exactly what I had been hoping for. And I will be the first one to say that I was a little bit impatient with Starbucks last year, but now I'm starting to see the light at the end of the tunnel, if you will, for Starbucks, because I'm incredibly bullish based off of these numbers, and it'll be interesting to keep an eye on Starbucks through the rest of the year. Not going to waste any more time though. We are going straight into stock number 4, and that is going to be Amazon. And Amazon had a lot of hype going into it on Friday morning. I remember looking at the stock and it was already up like 5% in the morning, so I was already kind of nervous about it. But let's go ahead and have a look at the numbers. Total net revenue was up 20%, about $168 billion back in 2025. We have crossed over $200 billion on the top line for the first time in Amazon's history. Amazing to see that. Now, I do want to highlight the cost of sales were up 19%, almost matching that top line growth, so not what I wanted to see there. But fulfillment was only up 14%. Tech and infrastructure was even higher than the top line at positive 22%. But then have a look at this. Sales and marketing only grew 2%, while G&A was down 6% compared to this time last year. Overall, Amazon is doing a great job of keeping their expenses low while focusing on growing that top line, so of course their margins look amazing. Operating income was up 43% compared to this time last year, and get a load of this, net income up 245%, but there is an asterisk when it comes to the 245% growth on the net income line, and that is because there was a highlighted section here that I have, and that is other income, where Amazon gained $53 billion on paper because of an investment in AI, specifically Anthropic. But overall, amazing numbers from Amazon, and even more bullish for the stock was AWS. When I did a little bit of research on this specific line item, because of course everybody is keeping an eye on AI growth. And when I did some research on AWS specifically, back in Q4 of 2025, AWS grew 24%. Last quarter, Q1 of 2026, AWS grew 28%, and now in this most recent quarter, AWS is up 37%. Quite a jump here, especially in comparison to the previous quarters, and that of course got Wall Street incredibly excited. But I do want to mention one negative that I didn't like, and that is that Amazon is increasing their CapEx guidance for 2026 up to $220 billion from previously $200 billion. Amazon is doing a great job when it comes to AI, unlike some of their peers. Looking at you, Meta. But there is one stock that I think is the clear leader after these earnings, and it is the final stock that we have to discuss. So let's get right into it. And I'm sure some of you have already guessed what the final stock here is in the video, but that is going to be Microsoft. And just have a look at these numbers. Revenue up 18% compared to this time last year, from $76.4 billion, now crossing the $90 billion mark. I didn't really break down their expenses, but just know that their gross margin was up 15%, a little bit lower than I would have hoped. Operating income up 18%, matching the top line. Again, generally I want to see that number higher, but their net income more than made up for it, in my opinion, because net income was up 31%. But that's not really the entire picture here when it comes to Microsoft, because just like Amazon, they have their Azure Cloud segment that I wanted to focus on and see how that is doing over time. And when I did some research on Microsoft's Azure Cloud, I found that back in Q2 of 2026, that grew by 39%. The very next quarter, it was up 40%. So it did see some growth, but nothing, barely grew anything, honestly. But here we are in Q4 of 2026, and Azure Cloud grew by 43%. And I know what you might be thinking, Victor, okay, so it went from 40% growth last quarter to positive 43% growth. That's nothing compared to AWS with Amazon. And yes, I hear you on that, but here's the kicker. Not only is Microsoft able to grow their AI segment, that Azure Cloud, but they're doing it without increasing CapEx spend. And I think that was the highlight that Wall Street wanted to see. And another massive plus for me, in my opinion, when it comes to Microsoft, is that they had almost $20 billion worth of free cash flow, something unlike a competitor like Google, who had negative free cash flow in this most recent quarter. So I was not surprised when I saw that Microsoft is up 19% since we got those earnings. And honestly, if you ask me, I do not see Microsoft slowing down here anytime soon, because again, in my opinion, Microsoft is the clear leader in AI currently. I know I threw a lot of numbers at you here in this video, but if you made it until this point, thank you so much. And again, if you enjoy these types of earnings analysis videos, be sure to give me a like and subscribe so that you don't miss out on future videos. As always, I will catch you in the next one. Peace.